Hey guys, I've been doing a lot of market research to determine what is a good value at this point and what I believe is going to be a strong fundamental reason as to why I should invest in something. So, with that being said, I want to start today's video with a story. And this story goes all the way back to 1999. When Jeff Bezos initially started Amazon, his idea was to sell books online because he read that retail online was growing at a rate of 2,300% per year. His idea of owning a bookstore online was all about his love for books. But this whole idea started very rocky for him. There's this article that I found on CNBC that kind of lays out the foundation of this story so that you can see where Jeff Bezos came from and how Amazon turned into the company that it is today. When you're very small as a company and you are faced with challenges and you're faced with adversity on a day-to-day basis and you overcome that, it makes your company stronger. And that's exactly what happened with Jeff Bezos at the start of Amazon. Barnes & Noble's chairman, Leonard Riggio, told him that they were going to destroy Amazon. They even went as far as to sue him for making the claim that he owned the Earth's biggest bookstore. So they were trying to immediately put his company out of business from the get-go. So he had all of that adversity to deal with. Then he had all of these people that were naysayers trying to tell him that why would I ever buy a book online when I can go down to my local bookstore, my Barnes and Nobles, and purchase a book there and feel it and touch it and read the back cover and see what the book is about. Why would I ever purchase something online whenever I can do that? And so he had all of this adversity to deal with in order to get to where he is today. And as you all know, he's the owner of one of the largest companies in the world, and he's one of the richest men in the world because he took an idea from its infancy and said, I'm going to do this. And he saw it through. And he dealt with all of that adversity. And even in the face of adversity, he said, this is my goal. And he stuck with it. If you go back to the actual chart of what his company looked like in 1999 versus where it fell to during the dot-com bubble bursting, it fell a whopping 95%. From $5.66 all the way down to 28 cents. And you might be asking, Clay, why are you telling us all of these things about Amazon? I don't care about Amazon. You're a cryptocurrency channel show. Why are you talking about this? I'm getting to that. The forecasted CAGR for the cryptocurrency market is currently at about 12.2%. And for those of you that don't know what compound annual growth rate is, it's basically just a formula that takes the return that would be required for an investment to grow from its beginning balance to its ending balance. So you invest in something and that investment grows a certain percentage rate over time. It's usually about 5 years is what they use for the CAGR. And it tells you what that speculative growth rate is going to be. That's what the CAGR is. And right now, a lot of these smart investors are saying that the CAGR for the cryptocurrency market is 12.2%. Now, this is specifically talking about businesses, so mining businesses, exchanges, things like that. Things that offer you a service or are just working in the cryptocurrency business, not necessarily the cryptocurrency market not the assets that are held in the cryptocurrency market like Bitcoin, Ethereum, all of those things. It's talking about the business growth. And that's important for what I'm going to be talking about today. The asset that I am looking to purchase at this time is actually Coinbase stock, coin. And the reason that I'm doing so is because I believe that there is so much potential over the next 8 years for stocks like this to just erupt based on the growth of the market itself. Let's pull up my calculator. So the highest that Coinbase ever traded was $368.90 minus the lowest that it ever traded was $40.83. That gives us $328.07. Then you divide that by the top, and that gives you an 88.9% drop in value. So the bottom was almost a 90% drop. Let's go back to Amazon. See, I showed you this chart of the .com bubble, and I said that it was down 95%. I got that number using the same math that I just showed you. So Coinbase has gone down 89% since its initial launch. And that's because we're currently in a bear market. But what is going to happen over the next few years, over the next 8 years? When you purchase stocks like this, you're investing for the long haul. You see the value, you see the potential there for future growth. That's why you invest in stocks in the first place. A lot of people like to day trade and swing trade, and that's totally fine, but this is actually going to be a long hold of mine. When you go to look at Bitcoin price predictions, there are numbers all over the place. There are people saying that we could reach $100,000, $300,000, $2 million per Bitcoin, and that's all fine. I don't really care about making price predictions of Bitcoin, but when you look at the halvings that have occurred, every single time the price of Bitcoin either doubles or goes further. So every 4 years, we have the Bitcoin halving, and the price does exponential growth, whether that's double, triple, whatever. There's been a lot higher growth than that, even with Bitcoin since its inception in 2009. So the reason that I'm saying this is because we had a halving in 2020, and we saw the price of Bitcoin shoot up last year. It usually takes about 12 to 18 months for the price to really go parabolic after one of these halvings, because it takes a minute for the price to set in, for that reward reduction to really set into the market. Miners start noticing the fact that they are receiving less rewards after these halvings. And we're going to have another one in 2024 and then in 2028. So you can't look at past performance to determine the future, but you can definitely use it as a gauge to see what the possibilities are. Going back to Coinbase, Coinbase has been around since 2012. They have faced a ton of adversity. You know how many people in 2012 and 2013 were telling people in the cryptocurrency industry that they were crazy, that they were nuts, that they had no idea what they were investing in, that they were just gambling their money away? Everybody was telling people. I know, because I was personally around back then in the cryptocurrency market, and I believed fundamentally in the idea behind Bitcoin. I loved what I was reading whenever I read quotes from Satoshi and read his white paper. It immediately clicked with me what his thought process was and what it was trying to protect us against. Back then, you had all of these people telling you that you're crazy if you get involved in the cryptocurrency market, and Ben Armstrong faced that adversity and said, no, this is what my company is doing. This is what we're building. We want to be here. And yes, every business is going to have its ups and downs. I'm sure there are 1,000 articles that you can read out there talking crap about Coinbase, and that's fine. But I am looking at this as a direct financial approach, and I think that Coinbase has done some phenomenal things over the years facing that adversity, creating a very simple UI for its users, creating a very friendly reward system for referrals, and now they have their Coinbase One subscription model that I think is going to just elevate their entire platform. People that trade regularly all the time and using large amounts have to pay ridiculous fees on exchanges. And what Coinbase One is a subscription that allows you to pay a one-time fee each month to make sure that you don't pay fees on your trades. Not only that, you get entered into sweepstakes and all of these other things that they have to offer. It's a brilliant idea. So I'm looking at this from a business perspective, and they are hitting all of the right points as a business, as a company in the cryptocurrency market. So if the cryptocurrency market continues to grow, their business is going to grow along with it. And that is exactly why I am choosing to invest in the Coinbase stock. I mean, just look at this UI. Look at how sleek and simple it is. If you want to buy something or sell something, you just click that button right there. You want to send or receive something? Easy. Big button right there in bold letters that tells you, okay, this is how you do it. You want to watch things on your watch list? Easy. Add them right here. You can look at your assets. You can trade. You can stake if you want to. Now, I don't advise anybody to stake on an exchange, but if you want to do that and you want to keep your assets on Coinbase and allow them to stake your assets for you, I will say that Coinbase is one of the only reputable exchanges out there that has never been hacked. That's something that you have to appreciate when you look at the history of cryptocurrency exchanges and the hacks that have happened throughout its history. Coinbase has been around since 2012, like I said, not functioning at that time, but the business has been around since 2012. I believe they started their actual operations in 2014, 2015, and they've never been hacked. You have to appreciate those figures. And because of all of those things that I've just listed off, this is why I'm investing in Coinbase. If you enjoyed today's video, please do me a favor and hit that like button. And if you haven't already subscribed, you're missing out on daily crypto content. That's going to be it for this one though. Crypto Clay, out.